Hina invests in mutual funds through SIP, but she is not able to understand how can she prepare an ideal mutual fund portfolio. Say if there's a platter of mutual funds, which scheme should be included in it as dishes so as to maintain a balance in terms of returns? How can you determine the right proportion of equity-based mutual funds and debt funds? When Hina discussed this with a wealth manager, she was advised to invest in every class for an ideal mutual fund portfolio. She was advised to invest in categories such as equity, debt, and passive mutual funds. Financial planners suggest that before preparing a portfolio of mutual funds, the investor should answer some questions. What are those questions? For example, how much risk can you take? What is your goal? How much cash you require? How long can you keep your investment? And how much tax is applicable? The answer to these questions will determine how much risk the investor can take, and based on this, the composition of the mutual fund portfolio will be decided. An investor who wants very little risk is a conservative investor. A moderate risk taker is a moderate investor, and an aggressive investor is one who is willing to take a lot of risk. Generally, it is advised to keep a maximum of 5 to 9 mutual fund schemes of different categories. These categories are equity, debt, etc. in their portfolio, that is. In this table as well, emphasis has been placed on the importance of diversification by including different mutual funds in each category. Speaking on this, Money9's co-founder and CEO Mohit Gang says that a conservative investor's mutual fund portfolio should have a ratio of 70:30 between debt and equity. That is, 70% investment in debt schemes and 30% investment in equity-related schemes. Similarly, for a moderate investor who is willing to take a medium risk, this ratio will be 50-50. For an aggressive investor, that ratio should be a 20:80, meaning 20% investment in debt schemes and 80% investment in equity schemes. Now, to create a sustainable portfolio, a mutual fund investor should always invest according to the risk-taking ability. Now, let's understand how can you invest in debt mutual funds for an ideal portfolio. If the investor is conservative, then the portfolio should have 20% short-term funds, 10% corporate bond funds, 20% banking PSU funds, and 20% target maturity funds. Similarly, if the investor is moderate, then the portfolio should have 20% short-term funds, 10% banking PSU funds, and 20% target maturity funds. If the investor is more risk-taking, that is aggressive, then the portfolio should have 10% short-term funds and 10% target maturity funds. Now let's understand how investors should allocate equity funds. If the conservative investor has to keep 30% investment in equity, then his portfolio should have 10% hybrid funds, 10% multi or flexi cap funds, and 10% large cap funds. Similarly, if the investor is willing to take medium risk, that is moderate, then his portfolio should have 50% equity schemes, 10% hybrid funds, and 10% multi or flexi cap funds, and 20% large cap and 10% mid to small cap funds. The aggressive investor's portfolio can have 80% equity, 10% should be hybrid funds, 20% should be multi or flexi cap, 5% should be value funds, 25% large cap, and 20% in mid and small cap funds. Those investors who want to create wealth in the long term, well, they should stay with the basic elements of financial planning. What are those? Well, these are goal-based investing, asset allocation, diversification, regular review of investment, and most importantly, patience and discipline. Whenever you invest in mutual funds, keep in mind that it should be based on your risk-taking ability, investment horizon, that is how long you want to invest, and investment goal. It should not be that you suddenly take any decision without thinking. If you're not sure what to do, you can take the help of a financial advisor.